Welcome students. In the last video lecture, I had explained you question number 10 of your textbook of chapter 5. Now in this video lecture, I am going to explain you question number 13 of your textbook. So first of all, let us read the question. A and B are partners in a firm sharing profit and loss in the ratio of 4:1. It means there are two partners, that is A and B, and they are sharing profit and loss. Old profit sharing ratio between A and B, that is 4:1. Balance sheet of their firm on 31st March 2017 was as under. Balance sheet is given to you, that is capital account of A and B, that is 75,000 and 25,000. Current account is given over here. Students, you are very well knowing, if in the question capital account and current account both the balances are given to you, then all the other entries except capital are to be given in the current account. So any of the adjustment effect that is to be given in the current account, and the capital account opening balance and closing balance would remain the same. So here you can see I have not prepared capital account. I have directly shown the value of capital A, B and C as it is. That you can see in the question also, capital of A and B that is given to 75,000 and 25,000, and C, that is the new partner, he is bringing rupees 20,000 as given in the adjustment. So I have not prepared the partner's capital account. I have directly prepared partner's current account because all the adjustments related to partners is to be given in the current account. Then afterwards, workers accident compensation fund, creditors and bills payable. Workers accident compensation fund is an accumulated profit that is to be distributed amongst the partners in their old profit sharing ratio. But we have to look in the adjustment, if any of the adjustment is related to it. So first we have to solve out it, and if any balance remains, then and then only it is to be distributed amongst the old partners in their old profit sharing ratio. Now asset side, land and building, that is 35,000, furniture, investment, stock, debtors minus BDR, bills receivable, cash in bank and goodwill. Now the old goodwill, the goodwill that is given already in the question in the balance sheet, that is the old goodwill. Old goodwill means the goodwill that is earned by the old partners before the admission of new partner. So that old goodwill is to be distributed amongst the old partners in their old profit sharing ratio. Now look at the adjustments. They admitted C as a new partner. They decided to keep their new profit sharing ratio at 3:1:1. It means in this question both the ratios are given to you, that is new ratio and old ratio. The new ratio after admission of C, that is 3:1:1, and the old ratio of A and B, that is 4:1. So here we have to find the sacrifice ratio. Students, we are knowing how to find sacrifice ratio, that is old share minus new share. So we will find the sacrifice ratio of A and B. In that ratio only, the new goodwill that the partner C is bringing, that is to be distributed. Now the first adjustment, C will bring rupees 20,000 as capital for his 1/5 share of profit and rupees 5,000 as his share of goodwill in cash. Students, before starting the sum, it has been told at the last what things are to be prepared, that is prepare necessary accounts and balance sheet. Over here also, generally in board examination also, journal entries are not asked to you, only to prepare the necessary accounts and the balance sheet after admission. So I had already discussed which accounts to be prepared, that is revaluation account, partners current account, cash or bank account and balance sheet after admission. It means 3 account and 1 statement, that is balance sheet you have to prepare. Now first of all we'll mention the opening balances. Capital account opening balance that is given to you of A and B 75 and 25. So instead of preparing separate partners capital account, I directly written on the balance sheet after admission, that is capital of A and B, that is 75,000 and 25,000, because no any adjustment effect is to be given in partners capital account. So as per the old balance sheet, in the new balance sheet also the capital would remain the same. Then afterwards C will bring rupees 20,000 as capital is given to you, right? So over here see the new balance sheet I have written of A and B, and C also I have written, that is 20,000. What would be the journal entry when he will bring the capital in cash? So entry, that is cash account debit, because cash comes in the firm. So cash account debit to C's capital account credit. So C's capital account, it means I have written directly the entry over here, that is C 20,000. In capital account you will be writing by cash account, that is 20,000, and you can see the second entry, that is cash account debit. So I have written here 2C's capital, that is 20,000. Okay, so I have not prepared separately capital account but directly posted it in the liability side first entry. Now cash opening balance is given to you, that is 3,000. See on the balance sheet, the asset side, the cash balance is given to you 3,000. So first entry in cash and bank account that I have written, that is 3,000. So to balance brought down, that is 3,000. If it is opening balance, we are writing brought down. If it is closing balance, then we are writing carried down. Okay, so here we have written the opening balance, that is 3,000. Always cash and bank balance is having a debit balance. It is written on the asset side. Now current account balance is given to you, that is 8,000 and 2,000. So current account, both the balances are credit balance. It may be that sometimes current account is given of one partner on the asset side and one partner is given on the liability side. If it is given on liability side, it is credit balance, but if it is given on asset side, then it will have the debit balance. So we will have to note down on the debit side. Over here both the balances are credit balance, so it will be noted down on the credit side. See I have written by balance brought down, that is 8,000 and 2,000. So after drawing the accounts and balance sheet, first thing you have to do, you have to mention the opening balance of all the accounts. Okay. Now then afterwards, workers accident compensation fund. Now workers accident compensation claim, fifth point is given to you, fifth adjustment, please refer it. That is given, workers accident compensation claim is accepted to rupees 1,000. Now claim is of how much? That is 1,000, but reserve, that is fund, we are having of 5,000. So our fund is enough to fulfill the claim. So after giving the claim of rupees 1,000, remaining balance of workers accident compensation would remain 4,000. See total workmen's compensation fund is how much? 5,000. Out of 5,000, 1,000 claim you are giving, so remaining would be 4,000. So that 4,000 is to be distributed amongst the old partners in their old profit sharing ratio. So you can see over here I have written by workmen's compensation fund, WC means short form, workers compensation fund. I have distributed 4,000 in the ratio of 4:1. So that would come to 3,200 and 800. Next one, that is creditors and bills payable. No any adjustment is there on creditors and bills payable. So as it is creditors and bills payable, I have noted down in the new balance sheet after admission, that is 4,000 and 1,000. So liability side is clear. Now looking at the first adjustment, C will bring rupees 20,000 as capital. That posting we have already done. You can see on the liability side I have written 20,000, and in cash account debit side I have written 2C's capital account, that is 20,000. He is also bringing his share of goodwill also. See, it is given for his 1/5 share of profit and rupees 5,000 as his share of goodwill in cash. So his goodwill share is rupees 5,000. So he is bringing his amount of goodwill also in cash. So the second entry, that would be cash account debit to premium for goodwill. Students, I have already clarified you that when the new partner is bringing the goodwill, then we have to utilize the word, that is premium for goodwill. So premium for goodwill, so cash account debit to premium for goodwill account credit, that will come to 5,000. Okay, so cash account debit to premium for goodwill account credit, that is rupees 5,000. So here on the cash account debit side I have written to premium for goodwill, that is 5,000. Now out of goodwill, half amount is to be withdrawn by the old partners. Now students, first of all, he has brought the goodwill in cash. We have written that entry. Now that goodwill is to be distributed amongst the old partners in their sacrifice ratio. Now what is the sacrifice ratio? That we have to find out. So let's find first of all the sacrifice ratio. For finding the sacrifice ratio, you are knowing the formula, that is old minus new. So in case of A and in case of B. Now old share of the A, that is 4/5, you can see 4:1. So it would come to 4/5. And for new share, it is given 3:1:1. So new share, that will come to 3/5. So it would come to 1/5. In the same way, in case of B, that would be old share, that would be 1 by 5 minus 1 by 5. So it would be 0. It means neither he is sacrificing nor he is gaining. So only the sacrifice that would be done by partner A. So the second entry, first he is bringing the goodwill. That entry we had already done, that is cash account debit to premium for goodwill account credit. Now that goodwill of rupees 5,000 which the new partner is bringing is to be given to only one partner, that is partner A, because this B partner is not sacrificing anything. We had already discussed that it is to be distributed in the sacrifice ratio. So only the sacrifice is done by A. So second journal entry, what it would come? Premium for goodwill account debit to A's current account credit. So here you can see in A's current account credit side I have written by premium for goodwill, that is 5,000, entire amount of goodwill brought by partner C that I have given to A. No any share is given to B. Okay. Now out of that goodwill which is given to partner A, he is withdrawing half of the amount in cash. So when he is gaining, at that time we have written over here 5,000. Out of that 5,000 he is withdrawing half of the amount. So here you can see I have written 2 premium for goodwill account, that is in A's column I have written 2,500. It means half of 5,000 it will come to 2,500. Over here the first entry I have written, see, 2 goodwill. What is that goodwill? The goodwill word that I have written, that is the distribution of the old goodwill amongst the old partners in their old profit sharing ratio, that is given to you in the question in the balance sheet. See, in the balance sheet the goodwill last entry is given on the asset side, the value is given to you 5,000. So before you the admission of the new partner, this old goodwill is to be distributed. So this 5,000 is distributed amongst the old partners in which ratio? That is 4:1. So 4,000 and 1,000. Now moving on to the next second adjustment, that is value of land and building is to be increased by 10%. Now what is the value of land and building? The first entry on the asset side is given to you 35,000. Its value is to be increased by rupees by 10%. So 35,000, 10% would come to 3,500. So increase in value. So that's why profit would be earned for the firm. If there is a profit, then revaluation account will always be credited. So you can see I've written on the credit side by land and building, that is 3,500. In simultaneous entry, you also do it on the simultaneous entry, you also do it on the asset side of balance sheet also. See, on the asset side I have written land and building, but I have not written 35,000. I have written 35,000 plus 3,500. So directly I have written 38,500. It means in the new balance sheet we have to write the new value of assets and liabilities after revaluation. Now, while value of furniture and stock is to be decreased by 5%. Now, what is the value of furniture? That is 30,000. Decreased by 5%. To 30,000, 5% it would be 1,500. Both are decreasing. So, loss will occur to the firm. If loss occurs, then it will be recorded on the debit side of revaluation account. So, you can see to furniture account, 5% it would come 1,500 and for stock it would come to 750. Simultaneous entry I am explaining you in the asset side also, that is furniture and stock. Furniture value that was 30,000, but in the new balance sheet after subtracting 1,500 it would come to 28,500. In the same way that is for stock. Actual value of stock, that is 15,000. From that 5% that would come to 750. So 15,000 minus 750 it would come to 14,250. So after adding or subtracting the new value of assets that we have to write. Then afterwards, the third adjustment, market value of investment is rupees 35,000, which is to be shown in the books. Now in the old balance sheet, the value of investment is given to you 25,000. Now in the new balance sheet, we have to show the value of investment at rupees 35,000. So from 25,000, now we have to show 35,000. So increase in the value of investment by rupees 10,000. Due to increase in value of investment, profit will occur to the firm. So we'll record on the credit side of revaluation account by investment, that is 10,000, and in the new balance sheet will show the new value, that is market value 35,000. Now the fourth adjustment, provision for doubtful debt is to be made at 10% on debtors. Now on the asset side you can see debtors is given to you 5,500 and from that bad debt reserve is subtracted, that is 500. Now we have to maintain 10% BDR. For 5,500, 10%. how much it would come? That would come to 550. On 5,500, 10%, that would come to 550. But actually it is given in the old balance sheet, that is 500. So still we have to make the provision of how much more? That is 50 rupees. 500 has already been done, but we have to maintain 550. So difference of rupees 50, that we have to make extra provision for bad debt reserve. So that will increase loss for the firm. So see, on the debit side of revaluation account, I have written 2 bad debt reserve, that is 50. Okay, so on the asset side, simultaneous entry, that is debtors 5,500 minus new value of BDR, that is 550. Outer column I have written 4,950. Students, if possible, whenever you are doing one entry on the revaluation account for increase or decrease in value of assets and liabilities, simultaneous entry you do in the asset balance sheet also on the liability or asset side, so that afterwards you don't forget to do the second entry of it and any of the entry doesn't get missed by you. Then afterwards, fourth adjustment, after that fifth one, workers accident compensation claim. Already we discussed that out of 5,000 that was workers accident compensation fund, 1,000 claim was accepted. So that claim, see, I have written over here, whatever the claim of workmen's compensation fund, that is 1,000, that is our liability to pay, and the remaining amount of fund, that is rupees 4,000, that is to be distributed amongst the old partners in their old profit sharing ratio. So here you can see partners current account by workmen's compensation fund, that is 3,200 and 800. In which ratio? That is 4:1. That is the old ratio. Then afterwards, sixth adjustment, dishonor expense of bills receivable rupees 150 and bank charges rupees 300, which are paid but not recorded in the books. It means previously these expenses were paid by the firm, but their entries were not noted down in the books of accounts. So these are one of the expenses that are paid in cash. So cash goes out. See, I have written both the entries on the credit side of cash and bank account, by bank charges account and by bills dishonor charges. I have written short form dishonor charges. By bills dishonor charges, that is 150, and bank charges, that is 300. And due to cash goes out, it increases the loss for the firm. So on the revaluation account, second entry, that would come on the debit side. So you see, I have written over here, to bank charges 300 and to bills dishonor charges, that is rupees 150. Always of the adjustment, we have discussed that 2 entries would be there. So simultaneous both the entries you post at the same time. Now all the adjustments that we have completed. Now after completion of all the adjustment, first of all we'll close the revaluation account. So you can see the revaluation account, there are 2 entries. Total of the credit side would be more, that is 13,500. Both the side have written 13,500. Difference that would come to 10,750. That is to be distributed amongst the old partners. Always the difference of the revaluation account, whether it is profit or loss, that is to be distributed amongst the old partners in their old profit sharing ratio. So over here in between A and B, in the ratio of 4:1. So 8,600 and 2,150. What would be the journal entry for it? That is revaluation account debit to partners capital or current account credit. Over here it is current account, so we'll post in the current account. So simultaneous entry that I have written in current account also. See, by revaluation account I have written, that is the profit 8,600 for A, and for B that is 2,150. Okay. Now after closing the revaluation account, we have to close the partner's current account. So all the entries that we have verified, after verifying all the entries, we have to do the total. First of all we have to see whether the total of credit side is more or debit side. If the total of credit side is more and difference comes on debit side, it means there is credit balance. Okay, so over here A's total that comes to 24,800 and B's total that comes to 4,950. Subtracting from the debit entries, it would come difference, that is 2 balance carried out. So you have written the closing balance, that is 18,300 and 3,950. That 18,300 and 3,950, that 2 balances that we have to write on the liability side. It may be that difference comes on the credit side. If the difference comes on credit side, then it is debit balance. It means I had already explained, just side ka total zyada, that's वैसी balance. It means whichever total total is greater, that type of balance that we have to consider. Over here credit side total is more and difference is coming on the debit side, so it is credit balance. But if the total of debit side is more and difference comes on credit side, then it is debit balance. If it is debit balance, we would write the entry on the asset side, but over here it is credit balance, so we written both the entries on the liability side. Okay, so now we have cleared revaluation account and partners current account. Now moving on to cash and bank account. You can see these many entries already I explained. Now after subtracting all the entries, debit side total is more. If the total of debit side is more, then debit balance would be there. So 28,000 both the side I have written the total. Difference you can see by balance can written, that is 25,050. So here also cash balance is there, not overdraft. If it comes the difference on debit side, then it would become overdraft. But over here the difference comes on credit side. It means the total of debit side is more. So debit balance that would come to 25,050. If debit balance, so we'll write on the asset side the new balance of cash and bank that came to 25,050. Now referring the balance sheet, first of all capital as it is already explained, current account closing balance just now only we had posted, then claim that was accepted of rupees 1,000 and remaining 4,000 that we had distributed amongst the old partners. Now creditors and bills payable also as it is from the old balance sheet, land and building new value, furniture and stock after decrease in value, new value that we had written, investment that we had to mention the market value in the new balance sheet, debtors instead of 500 now I had subtracted over here 550, so the closing balance that comes, that is 4,950. Then afterwards bills receivable. See, bills receivable in the old balance sheet I had already explained that after making all the adjustments, any of the assets or liabilities should not remain on which the adjustment is not provided, as it is those liability or assets that we have to post it in the new balance sheet also. See, in the new balance sheet, creditors, bills payable, on that liability no any adjustment is given to you, so as it is I have written creditors and bills payable. In the same way, in case of bills receivable also, no any adjustment is given as increase or decrease in its value, so as it is from the old balance sheet I have written the value that is rupees 2,000. Now after completion of all the entries, first of all look in the question in the balance sheet, any of the entries should not get remained. Every entries should be posted in the new balance sheet. After completion of all the entries, do the total of liability side and asset side. If the total of both the side comes equal, then your answer is coming as correct. Over here you can see total of both the side is coming equal, that is 1,48,250, and on the asset side also 1,48,250. So this is the end of the sum. We have seen that the answer is coming correct as the both the sides get tallied. If both the sides get tallied, then your answer is correct. Students, these are very important sums. Revise it again and again. In the next video lecture, again I'll be explaining you few of the sums related to this type. Till then, keep practicing. Goodbye. Stay blessed.